Okay, today we're going to talk about SPX 70TE trade. This is a trade that I have been working on for about 2 years. I took some big losses last year and changed my trade plan, and since then it's worked very, very well. Okay, and so I'm going to be talking about the details of this trade and actually some performance information, data, and trades that I actually took this month. And so the information is going to be very, very relevant. So let's move on here. Okay, so what can you expect today? Basically, I'm going to show you how you can make consistent returns monthly based on margin capital at risk by using high probability trades. In this case, SPX 70TE. And the goal here is not to take large losses and make those returns month over month. Okay. All right. So what are you going to learn? You're going to learn how to select the right options and credit spreads before the market opens. Enter and exit your trade, how to do that, how to prevent large losses, have a general understanding for when not to trade, and how to trade consistently profitable. So I'm going to be talking about details on this in every area here. Okay. All right. So stick with me until the end. There's a special bonus I'm going to give you, and you don't want to miss it. All right. So let's move on. Okay. Before we start into the material here, it's really good to turn off all your distractions, take some, get some paper, get some notes. The Q&A session, I'd like to wait until the end of it, just so everyone has a chance to listen to the information and digest it, okay, with all the questions. But I will answer every question and stay till the end to answer every question that you have, all right? This is a pre-recorded webinar, so if you miss something, you can always go back and get the information, and we'll send out the replay and the slides for you, okay? All right. So with that, the question here is, why are you here? And so I listed out 3 reasons. This is the first. Number 1, you are interested in learning new strategies that will take your trading performance to the next level so that you can finally leave that 9-to-5 career behind. That was my dream and my goal. And if I can do it, you can do it too. So reason number 2, you've seen, heard about, read about others making money in trading, but yet you know you can do it too, but you're just not seeing your account grow fast enough based on your goals. Number 3, you've tried different trading strategies that you thought, okay, this is it, only to discover just not getting you to the place of consistent trading results. So with those 3, just a show of hands here or in the chat, which one is most closer to you? If it's 1, 2, or 3, or 1, 2, and 3, that's fine. If it's something else, I'm here to support you in any way that I possibly can so that you can be successful in your trading. All right. Thanks, Paul, Justin. Perfect. 3, 1, 2, and 3. I was the 1, 2, and 3 guy, all right, for many years. And my goal here is to allow you guys not to have to go through all what I went through and make it very much simpler for you to be successful. And that's really is my goal. I'm a regular guy. I don't drive a Lamborghini. I don't have a private jet, but I have a great, beautiful wife, and we live in Puerto Rico, and 5 great kids, 4 of which are here in the picture, and then my mom and dad. My dad passed away about a year ago, and that was an MBA result event that I was at. Okay, so just a regular guy. Okay, all right. So mindset is probably the most important thing other than risk management in trading. So let's set the mindset correct today, right? So let's imagine what it would feel like if most of your trades were winners, right? Month after month, and it would be confirmed by watching the size of your account grow at the same time. This is achievable, guys, all right? You can do this, all right? So the other part is becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan. Underline those words, proven trade plan, right? That is profitable over time, allowing you to grow your account month over month. That's the goal, okay, as a trader. And so I'm going to take you through the detailed steps of how to get there, okay? And I'm telling you, if you follow this recipe, you will be successful, okay? I promise you. Okay, so let's start with SPX. What is it? It's an indice, and it cannot be traded directly, but you can trade options on it as well, directly. Okay, just like NDX, just like the RUT, the RUT. What is a credit spread? A credit spread is a combination of two puts or two calls where the put or call that is sold is more expensive than the put or call that is bought. Okay, so in this case, you would be selling the 3010 35 and buying the 3005 put, okay, for 45 cents. Now this is how Thinkorswim puts in these trades, okay? So the SPX 100 doesn't mean, because some people get confused between 500 and 100. It's the S&P 500 index, and this is the SPX. The 100 means that there are 100 shares, basically options in the index. Okay, if the audio is breaking up, everybody can you all hear me? Okay. Okay. You might want to check your sound settings, Walt, if you can't hear well. So sometimes the video, actually the screens or the slides go a little bit slower. So I've been told to go slow sometimes. Okay. All right. So so the 100 just pertains to the number of shares per contract, and so we'll talk a little bit more about that. And this particular spread is a bull credit spread. Okay. Okay. And again, you're selling the 3010 put, buying the 3005 put. And what happens is when you put on that trade, you're actually receiving a credit. And that's why it's called a credit spread. So because the 3010 is more expensive than the 3005 and you're selling it, you're actually receiving a credit. Okay. The trade is considered to be a high probability trade. However, it has risks. So you trade in the high probability for the risk management. And so in this particular trade, the max loss, right, and this is 10 contracts, would be $5,000 minus the $450 that you put in for the trade that you got for the credit. Okay. So if some of you have traded these before or traded 0 DTE, you know how big of a loss that you can take. And I can't emphasize this. I can't emphasize this more. You have to be careful with these trades and manage your risk correctly. So it's a terrible risk reward, but the rewards are very, very good because it's huge amount of consistency by using these trades. Okay. All right. So the max loss in this $5,000 again minus the 450, and that's also the margin requirement. So it's 10 contracts that you're putting on. Okay. So it's and the margin is $1,000 per contract because it's a 10 wide, right? If it was 30, 10, 30, I'm sorry. Yeah. Okay. So this is 30, 10, 30. Yeah. So it's 5,000. So if it was 30, 10, 33,000, it would be, it's $500 a contract in this case. If it was 30, 10, 30, 000, 3,000, it would be $10,000. Okay, it's $1,000 margin per how wide it is, right? Okay, let's move on here. So why is this such a good trade? This is why. Okay, this is the decay in options, call options. 65 days out. Okay. So or 60 days out, 68 days out. So from 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days, the rate of decay is 57%, and 5 days to expiration is 100%. So the most decay happens during those last 5 days of the trade. And so that's one of the benefits of 7DTE, because it basically, if it does nothing, the market does nothing, the trade will expire worthless, and it does, basically the market does the work for you, okay? Or the fact that it's an option. Okay, so let's talk about profitability factors. There are 3 profitability factors in this trade, okay? The first one is implied volatility. Implied volatility in this case is measured by the VIX. So the ideal setup is when volatility is moving higher and then decreases. That will significantly reduce the initial premium collected, and that's what you want, because you're selling a premium, and then you want that premium to decay as time goes, right? And that's how you grab the profit, because you'll close it at a lower premium than you put on, right? And I'll give you specific examples of that. All right. So theta. Theta is one of the Greeks. So it measures the rate of decline in the value of the option due to the passage of time. Again, this is a big factor for 7DTE, because theta, the rate of change, the rate of decay happens very, very quickly during that 7-day period. It can feel like a lifetime sometimes, especially if you're getting threatened, but it is fast. All right. Market direction is another profitability factor. So if you put on a bull spread, which is a put spread, and the market is moving higher, which is trending away from your position, it will cause a premium price to drop. Okay. If you enter the trade and the market moves against you or in the direction of the credit spread, you'll see the premium price increase significantly. But as long as it stays within the acceptable range, right, it doesn't breach the short leg of the trade, which in this case it was 30-10, right? We talked about, it will remain profitable. And so again, the market or the rate of change does the work for you, and so it's a huge edge that you have. All right. So I want to talk about risk management first, and this is probably the second most important part of trading. I remember the psychology is first. Okay. So in risk management, I'm going to always trade with a plan, right? And again, it took me 2 years to put this together, and I'm always tweaking it a little bit. Okay. You want to determine max loss and max loss and risk reward before entering the trade. Okay. You want to trade no more than 20% of your credit margin based on total trading capital. Okay. You want to leave room for drawdowns in case you need to adjust the position. You don't want to allow more than a 2% loss in your trade per trade based on your trading capital. So if you're using $10,000, let's say, and your loss shouldn't be any greater than $200, right? For highly trending market, position trades to follow the trend. And that's why when I trade 7DTE, I mostly put on bull spreads, because where's the market going? It's typically going higher. And that's 2/3 of the time. The rest of the time, it's either consolidating or moving down. But when it moves down very quickly. And typically those bear markets are fast and go away quickly. Okay. So I never hold a short-term credit spread overnight. And when I talk about short-term, I talk about 1 or 2 days. Usually when I'm going to close a trade, and if it's 2 days out, regardless of the premium, I either roll it or I close it. So I don't like having that overnight risk that close to expiration, because it can get very expensive to roll a trade, and you don't want to get into that situation. Size your trades to ensure emotions do not take part in your decision-making process. Trade small, trade often. I always say this. Trading small reduces emotional decisions, and trading often builds experience. And trading a lot builds experience and increases your performance. Okay. So, trade according to the account size you have, and I have a rule of thumb for that, and I'll share that with you in a few minutes. Okay. So number one in the pre-market routine, let's talk about that. I review areas of support and resistance to determine basically when to adjust or just get out, of these trades. And so I generally don't get out. I use these support resistance areas, even though I have rules for, by price, where to get out. I'm always watching, and I'll share that example with you in a few minutes here. I do review the US dollar because it has a lot to do with the S&P 500, because most of the stocks in that indice, basically rely on revenues from overseas. If the dollar is high, it becomes more expensive for products to be sold overseas. Okay, so that's something that I watch, and especially if it moves very, very quickly. 10-year treasuries. I don't know if you've heard, in the past few weeks that treasury rates have moved higher quickly, and that's really something that affects the market as well, the SPX. And the reason is because when rates go high, there's competition for dollars, and those exit from the equity markets and go into the bond markets. Additionally, there's a fear of inflation, and especially for tech companies, when they're growth companies, they basically have a lot of debt, and they need that debt to be lower cost in order for them to grow their companies. And so that affects those companies most, right? So that's why I look at that. I look at ES futures. I actually trade them as well. And since it trades basically 24/7 except for the weekend, it gives you a nice flow overnight, and you can tell where the trending market is, overnight generally. Okay. And that's helpful as well. And then I review the VIX, which is the volatility index for the S&P 500. And that's very, very important as well, as I mentioned earlier. Okay. And then again, I determine what credit positions if I'm going to be placing them, I put them on so that I have them saved, and I don't have to think about it and just adjust them if I'm going to put on a trade when it's the right entry point. Okay. Post-market routine, I determine if rules were broken and why. And breaking rules, it means that you're not following your plan. If so it's important that you understand why you did it, and you go back and adjust it and maintain your discipline. So consistently breaking your rules will lead you to ruin. I can guarantee you that. I've experienced it. Okay. Determine if risk was within acceptable levels for wins. Because even if you win, and you're still breaking your rules, it creates it creates an area of complacency, and you don't want to be complacent when you're trading. You want to stick to your rules. Okay, determine if losses were within acceptable ranges. Sometimes emotions get in, and so if you have fear because you had a recent loss, you may trade a lot smaller than you normally do, and in order to maintain your consistency, you can't trade small because you can't trade with fear, and usually you don't use your position size correctly, and so you won't make money, enough money to sustain the losses that you may take. Okay. On the other hand, if you're complacent and greedy, you're going to be bound by that, because eventually you're going to take a big loss, and that just happens. Trust me. Determine if tweaks or adjustments are needed to your trade plan. I'm constantly looking at it and making sure, although I've been through 2 years of market conditions, especially in this trade, I'm still constantly looking for other things that may affect it. And right now it's pretty steady. I can tell you that right now. Okay. So, and then update your trade journal with your findings, depending on what you did right, what you did wrong. And it's it's just a good thing to have to make sure that you're on track. Okay. All right. Excuse me. So let's get into the 7DTE trade itself. All right. I'm going to talk about entry and exit guidelines. Okay. Enter with small positions using multiple expirations. So what does that mean? When I first started trading these, I would put on a full position, let's say, you know, let's say 15 credit spreads. Okay. So I would put on 15 credit spreads, and I'd put them all on one date. Right. And then I'd wait for that time to, for that to settle. And then I would close the position, make a profit, or have to roll it, etc. Well, as my account started growing, right, we got bigger and bigger, and then I was up to like 40 positions, and that when you have a very, very strong threatening trade, what happens is that you'll have to adjust it, and probably adjust it several times, and you don't want to be stuck with just a big position, because again, your mind doesn't think right, because emotions start taking over. Okay. So now what I do is I take my positions and I separate it out. So let's say I trade 15 as my max. I'll put on 5 credit spreads at once, right? And then I'll wait to the next expiration, right? 2 days later, and then I'll put on another credit spread with 5 positions. Well, the 5 positions that I put on before, they're managed, right? So typically those positions will be profitable already when I put on the second one, and then I go to the third one. And I can tell you that in this market, I hardly ever have 2 positions or 3 positions put on at the same time. Actually, this week was one of the first times that I had it, and it was just because I had 2 positions that I was going to be exiting on that day, and actually exited those 2 positions that day. So it ended up with 1 position. Okay. And we'll talk about that in a second. Okay. So that's my part of my trade plan is, probably the most important for 7DTE. So take that to heart. All right. So when you put on the trade, you want to see like a spike in volatility, right? Lately, we haven't had too many, but within the day, during the morning, usually the volatility is higher. So I like to put on trades if I'm going to put on 7DTE in the morning, because volatility is highest in the morning. So I use that. And then I look at the VIX to see, where there's an opportune time. Like today is a good example. Today, the market dropped at the open. It wasn't a lot. It just went down, how many points? Went down about 20 points. Okay. In this environment, that would have been a perfect time to put on a trade. Okay. And, you don't know how much more it's going to drop, but you kind of have to, clench your fist and put on the trade, because that's the time that you want to put on that trade. All right. So for a delta, I use 10 to 12 for bull spreads and 7 to 10 for bear spreads. And even lower sometimes. I'm using about a 5 to 6 on bear spreads now when I do put them on. But I don't usually put them on. And in this recent downturn that we had, I did put on a bear spread and closed it as soon as I possibly could. I don't like holding those positions. I do take profits early. So usually 50 to 80% of credit received, or greater if market conditions are favorable. Market conditions are favorable. So what I've been doing is I've been putting on trades around 70, 65 cents around there and closing them for 10. And I'll show you the history of those trades in a minute here. Okay. So for positions that have been rolled or adjusted, profit target should be higher or lower, actually 20 to 50% of credit, because usually when you roll a position, you're not rolling it to the same delta that you put it on initially. And so the delta is going to probably be around 20 or 30. And so there's more risk when you do that. And so when you're able to get out of those trades, unless the market really moves in your favor, then you want to close those trades out as soon as possible. Okay. Okay. Adjustment or roll. I initiate in a low volatility environment, and I wouldn't even call this low yet. Right. Probably below 15, 20 points is acceptable. In an environment that's now above 15 into the 25 range, I usually go 30 to 40 points, and if we're higher, even higher than that. All right. So when I roll, and that's 20 points away from the short leg, right? That's what triggers the roll. And again, in higher volatility markets, as I mentioned, you want to use around 30 to 40 points and far enough from expiration as well. Okay, don't use stop losses on these. Other than on occasion, I will use it for call spreads if I just see the market really, really moving against me, and I don't have a lot of time for expiration. I have closed positions before for small losses. Okay, I just don't like putting on call spreads. All right, so this is a trade adjustment I'm going to walk you through. Okay, this is from from 2019. All right, it's been a while. I haven't changed it just because this is a very typical process that I use, and it's the same for the past 2 years. Okay, so before you before you kill me and telling me, hey, you're only talking about trades from 2019, that's the reason that I've traded. I do have examples. I guess I'm lazy, and haven't put one together, but I do have examples recent that are very, very similar to this. Okay, so I could have changed the dates and the numbers, but this is an actual trade that I went through, and I just wanted to share it with you. Okay, and I like sharing reality, not what's proposed. Okay, so this is a trade that I put on 7/23 in 2019. So I put it on as an iron condor. I think I legged into this position. 29.45, 29.40 put, 45 cents, and these were 5 wide as well. So I'm trading 10 wide now as well. But you can trade 5 wides. It's perfectly fine. So and then I got a 40-cent credit for the call spread. Right. Well, a day later, the market moved against me. Okay, and it moved into the 20-point threshold. And so what did I do? Was I moved the call spread up, and I took a 35-cent debit. Now, a lot of people that trade credit spreads say you never want to roll it, for a debit. Well, in my trade plan, I roll it and position it to where I know that it'll be de-risked. Okay, and so and because I'm using both sides and looking at it as one trade, that's why I can do it. So I don't look at it as a loss, and I'll go through the process here and show you why. So at the same time that I rolled this trade and took a 35-cent debit, I rolled the put spread and took a 30-cent credit on it. Okay, so what did it cost me to roll? I look at it as 5 cents. That's what it cost me to roll. So I took a 5-cent debit on this roll. Now I have 85 cents to work with. So taking away 5 cents is not a big deal, right? To de-risk the trade. So what happened after that? The market went through, and I was able to close both positions for 10 cents. Okay, so it was a profitable trade, even though I rolled one side for a debit. So I collected 85-cent premium at the beginning. I paid 5 cents to roll it, and I closed it for a 60-cent profit. That's a successful trade. Okay, so if you look at it that way, you won't get caught up in the fact that you're rolling for a debit. Okay, you're rolling for a loss basically in that particular trade, but it's only one leg, and I look at it in both legs. Now, when I'm trading one leg, it's much easier to roll a put spread for a credit than it is for a call spread. And that's another reason why I don't trade call spreads that often. All right, so let's go into trades that I did 1 year ago. All right, and then I am going to walk you through the trades that I did in April as well. Okay, so I want to show you, because this was a very, very volatile time. This is right after the March drop. Okay. And volatility was still in the 50 range, I believe. I have to go back and look, but it was very high. Okay, so it was very volatile. All right, so let's walk through it. So on the 4/7, I put on a put spread, 25.20, 25.15. And then the market moved up, so I was able to close it for 5 cents, and then put on another put spread for 50 cents. Okay, so I netted 45 cents. Then I put on a another call spread, and then was able to close the put spread for 5 cents, right? So I gained another 45 cents on that trade. And then I put on another put spread on the 15th and closed the other put spread for 15 cents. So that's another 35 cents there. And then I put on another put spread, and I had to roll the call spread and took a debit of 15 cents. Then I was able to sell another put spread and bought the call spread for 5 cents. Okay. And that netted me 30 cents. And then closed out that roll that I did. Okay. Then I put on another put spread for 65 cents and closed out the other two trades. Okay. And netted me 40 cents. And then I put on right at the end here, put on another put spread, and I closed out the other put spread for 15 cents. So it netted me another 50 cents. And then let's see, another trade that I put on. Yes, here's the last trade that I put on and closed that for a net of 40 cents. And that was the last trade that I put on for that month. Okay. So total, $202.95 in credit. So if you add that up and you're using one contract, right, you would have made $295 in that month, right? If you're using 10 contracts, you would have made 10 times that amount, $2,900. Okay. So that's how these work. And this is very, very typical. Go back, study this, look at where when I put on these rolls, especially, because that's really the important part. And you'll learn a lot from it. Okay. All right. So let's talk about trade performance. 2021. Again, as I mentioned, I use 3 expirations, 18K in margin total. So I had to use that 18K one time this month, which was this week. But normally I'm trading using 12K in margin. Okay, because I usually have 2 positions on for 7 DTE. So let's roll through these. Okay, so on 4/1, I put on a 38.90, 38.80. I closed it on 4/5, and look at the dates. I'm not waiting 7 days, guys. Right? If you wait 7 days to let it expire, the last 10 cents will probably take you 3 days to close it. Okay, so check out the dates. Right? All right. So the net minus net gain minus commissions and fees is $300 for that trade. Okay. All right. So next, I put on another one on 4/6, closed it again at 10 cents on this one, and I netted 330 minus commissions and fees. So the running total so far is 630, and this is actually this month. So I put on another one on 4/9, closed at 4/12 at 10 cents, netted another 330. So running total of 960. Doesn't stop there. On 4/14, I put on a call spread because the market was volatile. It moved down. Okay. And I had to roll a position. So I wanted to have some additional premium and additional delta, or lower the delta. And so I, rolled the trade. I put on a call spread for 50 cents. Then the market moved up a little, and I was able to add to that position. So I turned it into 6 right? 6, and I used 80 cents on that particular trade. And then I was able to close that out for 20 cents, right? So that was these were call spreads that I used, and again, I closed these out as fast as I possibly could, and made a nice profit on it. So I took advantage of the market. So in this case, I made 315, even with the rolls. And you can see here that I rolled the position for $0. Okay. When I look to roll the position, I look not so much at the credit. Obviously, I do. I don't want to have a big debit on it, but I look at where the support and resistance areas are, and want to make sure that I roll these things to an area where it's not going to be threatened again, right? So so that was the roll I did, and I closed it out. So then the market started going back up. I put on another put spread on the 19th. I closed it on the 22nd for 10 cents. So again, the profitability factors I'm using is market direction in this case, because the market was moving in my favor, and theta, because volatility was starting really to come down again. Okay, so I netted 3,300, 1605 running total. In this case, I put on another put spread. I didn't get the contracts all at the same time. That's why the 62.5 is there. I think I did it in two tranches, and then I closed it again for 10 cents on the 23rd. So 2 days later, I closed the trade, okay, and made another 315, 1920 total. Okay, is that over? No, I don't think it's over. Okay. So I put on another trade. I put it on at 75 cents. And 3 days later, I closed it for 10 cents. And so now I have a net gain for this month of 2,310. And then I did put on another trade and close that trade for 11 cents. And that was yesterday, I believe. And I was able to get 5 of the contracts closed. And then I did not want to, because it was only 2 days to expiration, didn't want to hold it. And so I closed the last contract for 15 cents. Okay. So now I have 2634 running total, and I put on another one yesterday. And it's, I put it on for 65 cents, and I think it's worth right now probably around 50 cents. So I'm going to hold this one probably through the end of the week and close it before Friday. So those are the trades that I put on. Those are the actual trades that I put on this month. And you can see how powerful 7DTE is. And you can bring it down, if you're starting out, you bring it down to 1 contract, these are 6. But it's, if you do the ROI on it, it's pretty good. You're at about a 15% return on these. All right. So, and I always say with credit spreads, if you're doing them correctly, you can make 5 to 15% a month. Okay. And this is just 7DTE. I have monthly trades put on, and I do 0 DTE. And so that adds to it as well. All right. So let's talk a little bit about some technical analysis here. Okay. And it's very simple with credit spreads. With futures is much different, but with credit spreads, this is I know it's a little hard to see, but this line here from left to right is a Fibonacci retracement. Okay. And so I like to, and this is an hourly chart. So these are my short-term fibs. And you can see here in these fibs where support and resistance are. Okay. But before that, look at the weeks. Okay. So these are the weeks, 1 week segments here. And you can see here that during that time, we had a very, very bullish market. And so I continued at every dip that we had, right? Dip here, dip here, dip here. I would put on these credit spreads. So every opportunity that I had, I put on a 7DTE credit spread. Okay. So, but I wanted to make sure you understood why I use fibs. Now, in this case here, you'll see that the support and resistance, you know, ends up being around those areas you see in the fibs. Okay, there's congestion that forms, and it's just a natural process. Whether it's a natural process because of the Fibonacci retracement or because traders are using it a lot, it ends up identifying areas where there's congestion, and so you want to understand where those are, to where, so in case you have a trade and it's being threatened, okay, and the market goes down, let's say, right, and let's say it stops at these congestion areas. Is it going to continue going down, or is it going to bounce and go back up? And it's just good information to have, to get ready to roll a trade if you have to, right? If it hits one of those areas and it bounces off it, you're not going to have to roll it. You're okay. But with rolling, you definitely want to act early and not let it go to say, oh, okay, well, the market's going to come back. The market's going to come back. Once it breaks that threshold of your exit criteria, take the time to make that adjustment, and that's very, very important. It'll keep you solvent. Okay, this is the longer term Fibonacci retracement that I use. And again, you can see these areas, and these are dailies, right? You can see these areas of support and resistance. Yes, I have trend lines in here, and right now, to me, we're going a little parabolic high, here, right? So, and I'm not saying we're going to have a correction anytime soon. I don't know. Nobody knows. But when the market starts behaving like this, you want to stay nimble and know that eventually we're going to have a correction. So with that, I wanted to share with you too a little bit on my next webinar. I'm going to be talking about micro futures. This is another trade that I've been working on for 2 years. These are micro futures, so they're very, very small contracts. I almost always have them on, and mostly bullish. And this is the result. I started with $3,000 in October, and I'm at over 16,000 right now. Okay, so this is the next webinar I'm going to do, and this is also part of our trade alerts that we use, futures trades. Okay, so now the question is, the question is, would you like to follow our trades and learn how to use high probability trades like 7DTE? And I'm going to talk about, the trade alert service. So hang in there with me, okay? Because the fact is that if you are interested in learning new strategies and you're not seeing your account grow and you haven't found the right strategies, this may be the turning point for you, okay? And I set everything up, I've been, set up Facebook, and I wanted to put together a trade group where, it's not just taking trades, okay? It's actually learning. And so all the trades that we do, we actually walk you through these adjustment processes and teach you how to do that, okay? And a lot of people stay in our service for 3-4 months. They learn what they need to learn and they move on, But it's just a great environment, and I'm really proud of it because it really teaches people how to trade, and it's not just taking alerts, okay? So the question is, do you want to have that edge? Do you want to break those barriers? And the question, are you going to keep doing what you're doing and hope that one day it's going to stick, or are you going to finally take the steps that you want to take, and know that it works? And yes, learning, training, instruction, practice, and success are all, that lead to success are all part of it. But there's also discipline, commitment, having an edge, right? Or multiple edges, and no quit attitude, right? And in order to be a successful trader, you have to have all those things. But what I'm here to tell you is I'm going to make it easy for you, okay? You can be very, very successful and not pay a lot in order to get to where you want to get to, okay? And we use Telegram, where it's very high speed. I trade. The alerts that I put out are the trades that I make. Okay, they come directly from my account, and so you can see here that these come in as they're filled, right? And that's how they come in, because we have that automated. And so I don't put on a trade. I don't ask, I don't set a trade alert that I'm not trading myself, right? And it's me with Ike, another full-time trader that I trade with, and is an amazing trader as well in stocks and options. And so these are the trade alerts. And so whether you're just getting started, already successful and ready to expand your strategies, our trade alerts will help you trade at your highest level. It's designed to transform your trading from uncertain to predictable and teach you how to generate constant returns. And so a lot of people come in and they stay with us for a long time. I've had this up for 2 years, and it works, guys. All right. So we have two types of chats. One is two-way communication. One is one. The trade alerts come in one-way communication, and we keep those very, very succinct, right? Very little information, only about the trades that come through those channels. And you can set up those channels basically to take alerts. They ding. They come out with bright colors. They'll give you alerts on your phone and on your desktop. Okay, so so those are the channels that we do. And every time we put on a new trade, a new different type of trade, we create a channel for it and we integrate it to our system, right? So let me talk a little bit more about success stories. So Matt, I worked with Matt for many years, and he joined our trade alert service and learned how to trade monthly options. And that's how I cut my teeth in credit spreads, is trading monthly options. And I still do them to this day. So if you're a career person and you want to lay low and just let money accumulate, trade monthly options. They're awesome and very, very safe. Okay. Luke is a guy that's been with us for about a year now, and he loves the service. In fact, he told me that today. He sent me a message, and he is in our trade alert service. He said, "Hey everyone, I'm driving to Vegas to gamble away all the money Al's made us on those 7 DTEs in the last 2 weeks. Let's hope the service. Let's hope I have service on Route 15 in case he sends another alert." Well, hopefully he gets the alert if he's driving. So yeah, Luke's been with us for a while, and then Emmy has been with us for just a short time actually, and he's been through, he says, thousands of programs, and I'm sure trying to figure out what the right strategy was, and he's learned a lot from us now, because again we teach. You guys have questions about transition or taking the trade and adjusting it. We'll walk you through it and make sure that you're set. Okay, and we do it with enough time so that we can address everybody's need and everybody has questions. So once you've done these adjustments a couple times, it's clockwork. It's easy. Okay, but the first times can be a little bit overwhelming. Okay, so but anyway, he loves the service, and we do have a great environment in it as well. I have a guarantee, okay, and this is something that you can try this almost for free, if you lose money. But the fact is that I do have this guarantee, but I've never had to make good on it, because everybody makes money. Even on the first month, they make money. So again, you subscribe to you subscribe for a month, you lose money, and I will refund your subscription by 125%. And so, excuse me. So, okay. So again, I've never had to come good with that guarantee. All right. So here's our normal pricing, and if you join the wait list now, okay, and I'm gonna set up the offer here. Okay, you should be able to see it. We don't have, the service is not open yet, and I'll explain why. We open only 4 times a year, and the reason we do this is because our focus is completely and totally on our traders. And so when new subscribers come in, there's like a 2-week window of them asking a ton of questions, right? Even though we have orientation, we walk you through orientation, we show you how to set up Telegram, there's still a lot going on, okay? And so you want to get everything set, and you answer a lot of questions at the beginning. So we use that 2-week period to answer all the new guys' questions, okay? And after that, it just really subsides down, okay? After that, if we were open, year round, we would constantly be getting these questions and answering the same things over and over and over again. And so this way, we can dedicate time to new subscribers that come in, and then refocus back. Remember now, if we do it every 3 months, right, we have 3 months of traders that are already in there, and they're not asking any new questions, okay, already. Only about, hey, are you going to put this trade on, blah, blah, blah. So the first 2 weeks, it's, we answer all the questions, and then they become our traders, and then we can focus completely on them and not have to worry about, bringing on new people. Okay. So that's why we do it. So if you join the wait list, okay, and this is what we're and it's for free. You don't have to pay anything. Okay. And you can make a decision, and the price is going to be for you guys $39, $79, or $109. Okay. And the 39 is really mostly monthly trades and Ike's trades. Ike does a lot of calendars and diagonals trades, and then monthlies. You have that access as well. The 79, which is the day trader, you get 0 DTE, 7 DTE, and the swing trader as well. And then the full time, you'll get futures, micro futures, which is what I trade, and spec trades. Okay, in that trade. So I do a lot of debit spreads and more aggressive trades in that group. All right. So another thing I want to share with you too is that I created a course a year ago, and the reason I did was because I was actually doing one-on-ones with people. All right. And basically coaching them on the trade strategies that I use. And so it's really a like a $400 value, and I was able to bring it down because the mentoring one-on-one I was charging $800, and I did have demand for that at that time. And then I brought it down to group coaching, so we had a group of 20, 400, that only had to pay around $400. Course value is about $400. So the regular price is $149, and if you're interested, the price today is $129. So you can get a discount on that as well. Okay, and I really encourage you, because it's not only the technicals of the trades in there. It's really the psychology, the trade plan, all the components that you need to become a proficient trader. Okay. And it really goes into the detail of all these trades. Okay. So it's a great value, and I encourage you to go that route. If you're not really familiar with credit spreads. Okay. So the question is this for you? If you want to learn a step-by-step process to gain income in a market that goes up and down, you want to finally break the losses and account drains that you have, and you want to be consistent and making consistent income, this is for you guys, right? And again, you get $20 off when you subscribe and you join the wait list. You'll have professional traders chat group and subscriber chat groups. So we have other traders in there, and we have a setup for them as well, that they put on their own trades. So you get, in addition to our trades, their subscriber trades, and they're doing really well as well. You get education and training portal, basically. So Ike is really good on Elliott Wave, and he's teaching our subscribers Elliott Wave, and he actually has webinars pretty much daily, showing setups and different short-term trades. I swing trade futures. He does shorter-term trade futures. and he sets that up with a webinar, and I think he has one going on. He has one going on pretty much every day. Okay, and he loves this stuff, and so he's constantly teaching other traders. We have automated signals. They come directly from my account. We provide the trade entry, fill price, price target after fill, and then how to manage it if you get into trouble. Okay, and then you get my guarantee. There's no, I mean, it's a win-win proposition here, guys. You know, and again, you're actually learning, you know, aggressively while you're actually taking the trade alerts, and you're gonna make money. You know, we haven't had 1 month where you know, someone lost money and took me on my guarantee. All right. These are other just this, you know, just in the past actually couple weeks that you know, these are additional testimonials that I got from a couple of guys that are in the group now. Atrick, I think, is wanting to go into futures now. He wants to upgrade. So we get a lot of upgrades for a few futures because they're really pretty easy to trade, and they make, you know, they make good money. So questions. Let's get back to the questions. All right. All right. Yeah, the ETA for that is probably around a month to get that going, to get that webinar in, because it's really a lot more technical, and understanding how the market functions and when to get in. So those entry points are more specific. So we don't do iron butterflies, but we may in the future, because we're constantly changing. Recommended broker, I use Thinkorswim for options, and Tradeovate for futures, just because the cost is really low and they have more automated tools. The trade journals I use are basically not real detailed, but I do give guidance a lot in the chat groups. I do use MES and M&Q futures. Those are the futures that I trade and love it. Yes, you'll be notified very shortly. We actually are opening Monday, I believe. Next Monday is the first day that we open. I trade 7 DTE, 0 DTE, and monthlies on SPX. And I also do some debit spreads as well. When do I get out for a loss? The only mention that I have on that is when I had a call spread and I knew the market was going to continue going aggressively higher, and I just took a 20-30 cent loss on that one. So that's really the only time. I don't use ES options. I don't trade those because I trade futures. So you're going to hear hopefully this week when to sign up. But we do open on Monday, next Monday. Adding a call spread. Let's see. Adding a call bear spread done without additional margin for more profit. Honestly, to add a call spread, it's not worth the risk in most times, because you're going to be constantly be threatened, you know, by those positions, even if it's a lower delta. So you know, and I like to open trades and close them, and so the opportunity benefit I get by being able to hold these trades only for 2 or 3 days far outweighs the risk of putting on call spreads. I use fibs. on 7 DTE, just supporting resistance, and the fibs give me that, and I use IBL levels. It's called IB levels, first hour of trading. So it's really that's really what I use, and the VIX to tell me when to get in, and the profit tells me when to get out. You don't need an account in Thinkorswim. A lot of people use Tasty Trade. They use IB, International Brokers. I know people use Schwab and Fidelity as well. So no, you don't need a Thinkorswim account. I do teach how to defend trades. Okay. And in live and also in our education portal as well. For broker I use for micro futures are Tradeovate. Yes, you're able to get the 129 course today. Yep, you should see it as you go through the process. I do provide alerts on exits, and I teach you how to set Telegram up so that you won't miss it, because I trade a lot overnight as well. I trade futures overnight, and so I put out alerts sometimes in the middle of the night. But you can adjust that so you don't have to take those. But I did a poll in the group for those trading futures, and I asked them. I said, "Hey, do you want me to send trade alerts only during regular sessions or all night?" 100% wanted them all night long as well. So you guys are avid traders. We have avid traders, man. Okay. I mentioned education portal. Oh, great. Okay. Thanks, Reiner. The Apple the Apple Watch helps you, huh? That's good. Okay, Jim. Great. Good to hear. Thank you. All right, join the wait list. Yeah, make sure you get on it. We're at a point where we're gonna have to. We did get a little over 100 members the last time we turned this on, and although they acclimated really well just because of the programs that we put in, the orientation, it worked really well. But we're actually talking about limiting it to 100 members at a time. So we want to make sure that we cover, and that we're able to teach you guys and spend a lot of time with you guys learning. So get on the wait list. Make sure you get on the wait list if you have any intent to join. And we do teaching at all levels. I even personally, and here's a real story, guys. A guy, he said, "Hey, I need to cancel my subscription." And this is actually twice that this happened. I need to cancel my subscription. And I said, "Hey, sure, I can cancel your subscription. Why? Why do you want to cancel?" And he said, "Well, I'm not getting the performance in my account." So that's crazy. Are you taking all these trades? And he goes, "Well, not really." And come to find out that he was hesitant to take the trades because he really didn't know completely how to do that. And I said, "Look, I'm going to work with you directly. So the next trade I do, I'm going to reach out to you and walk you through that trade." And I've done this for many people. And I had another guy that was going to cancel, and I walked them through the adjustment trade as well. And after you get that one or two times, and I worked with him one or two times on that adjustment trade and reached back out to him to make sure that he was able to get it. So I actually walked them through it, and the first guy that wanted to cancel hasn't canceled. He's still with us, and I guarantee you that this other guy is going to be with us as well. So don't be bashful if you're not sure about it. You can start slow, but it's not only me that shares the training information. We have three other traders in there that answer a lot of questions and are very proficient traders, and they trade full time. Okay. And they're with us. So there's plenty of education to go around and training. How much do you need? I really recommend, if you're trading SPX credit spreads, $3,000 to begin with. That really is, I mean, obviously you can start with 500, to make one trade, but I'd really encourage you to not go in without about $3,000 starting. Okay. And even with futures, it's even less than that. I mean, with day trading futures on Tradevate, you can start with $100. So, all right. Any other questions? Okay, great. Thank you, and hope to see you in the trade alerts and making a lot of money. But make sure you get on that wait list. All right. Thanks, guys.